Most traders spend countless hours learning entry techniques and experimenting with the latest hot trading indicator. But what they don't realize is that the best techniques and indicators will still lose you money if you're in the wrong stock. Why? Because you'll get false signals and lose over and over again. That's why in this video, we're going to teach you the most important trading skill you can develop: finding the big opportunity stocks, or what we call stocks in play. We're breaking down our exact methodology for you, so don't miss this game-changing trading video we produced for the trading community. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
Do you find yourself searching for the right stocks to day trade, only to end up with disappointing results again and again? As Mike Bellafiore preaches to us at S&B Capital, you're only as good as the stocks you trade. You can be the best trader in the world, but you'll lose money if you pick the wrong stocks. Conversely, if you're an adequate trader and choose outstanding stocks to trade, you could profit handsomely. To be a consistently profitable trader, you have to pick the right stocks to trade. There, I said it. But what is the right stock? How do you determine which stocks are the best ones to trade? The answer may bring you millions of dollars in trading profits. But the good news is that it's a question that we could help you answer, since here at S&B, we have a trading floor of over 50 pro traders. I'm one of them. We're located in the heart of New York City and are one of the world's longest standing and most successful proprietary trading firms. Proud to develop numerous 7 and 8-figure traders per year, and they're day traders. I've been a professional prop trader for S&B for years now, and in this video, I will share the formula for choosing stocks in play. Imagine having a head start as if someone has already done most of the work of finding an edge for you. With this blueprint for finding the best stocks to trade, you could tap into the potential of these market gems, increase your chances of success, and find other stocks just like them. Get ready to navigate the complexities of day trading and stock selection with confidence. Do you ever feel like you're trading the wrong stocks, and if you were in better stocks, you would make much more money trading? Well, you're right. You need to be in the right stocks. Being in them makes all the difference. The best stocks to trade are what we call stocks in play. Here's how we define a stock in play. Catalyst, news, technical, or price. The catalyst is scored an 8 or better out of 10. Liquidity, range, and RVOL is greater than 3. Let's explain what we mean by each so you know exactly what to look for as a day trader. Stocks in play are stocks with a catalyst. A catalyst behind the stock will cause many market participants to buy it, and not only buy the stock, but buy the stock today. Think about who moves the stock. The traders who move stocks are those with big money: investment banks, hedge funds, asset management companies, sovereign wealth funds, pension funds, and private equity firms. Think about these big money traders sitting around their trade stations waiting to put their millions to work. What are they going to be interested in buying? These big money traders want a catalyst to put some serious money to work. They want a good reason to put their vast sums behind the trading idea for their firms and clients. They need to perform. They need to make money on their trades. They must also explain to their clients why they put big money into a stock. A positive news catalyst is something their clients will easily understand and accept. So what is a catalyst for these big money traders? A catalyst is either news, technical, or a price catalyst. A catalyst can either be positive or negative. The top positive news catalysts are an unusually good earnings report, better than expected guidance reported, a new product announced, a move into a hot new sector, collaboration or partnership with an established company, favorable government regulatory announcements, or a new large contract for the company, cost cuts, analyst upgrades, macroeconomic news, management changes, dividend announcements. As mentioned, an example of a stock with a news catalyst can be a stock that has recently released its earnings report. It's best to find stocks with unusually good or bad news that was unexpected by most market participants. Again, think of that big money trader seeking to put millions or even hundreds of millions to work. What would get them interested in buying a stock? Unusually good and unexpected news would get them interested. A typical example of a news catalyst worth trading would be company XYZ just released their earnings report, and it's much better than expected. With this positive news catalyst, big money traders will want to jump into the stock and take a position or add to their existing position. We will want to trade this stock as a result along with them. Big money traders can drive the stock to much higher prices with a positive news catalyst. Big money traders leave footprints as to their intentions. As day traders, we could detect that they are buying or buying big. We use our tape reading skills to see this. Tape reading is a study of the order flow of a stock. When traders learn tape reading, they could examine the buying and selling of a stock to find areas where it is most likely to go up or down. This is a skill they learn like a basketball player learns ball handling. Can you be a solid basketball player without learning how to dribble? I don't think so. With this essential skill for day trading, traders can position themselves to find excellent risk-reward trades at prices to help grow their trading account. Spotting a news catalyst is a very effective way to find a stock in play. Consider searching for them in your trading. Having said that, a news catalyst is not the only kind of catalyst that will catch our attention. It's not the only kind of catalyst that helps us find a stock in play. So what else can? A stock that has a technical analysis catalyst. A stock with a technical analysis catalyst can be an outstanding stock to trade. A technical catalyst is one where the market participants are looking for a stock to clear a specific price that hasn't for a significant amount of time. And then the stock finally does. Market participants will want to buy this stock when it does. This can make for a powerful technical analysis catalyst to trade the stock. Popular technical catalysts can be triggered with breakouts, moving averages, RSI, MACD crossover, Bollinger Bands, candlestick patterns, trend lines, Fibonacci retracements, and maybe most importantly, volume. So let's discuss an example of a technical catalyst, a breakout trade, just to give you some more insight. A breakout trade involves taking a position in a security when its price crosses a certain level of resistance or support, typically with high volume. The idea is that once this technical level is broken, the momentum will continue in the breakout's direction. So here's an example. Let's say a technology stock, let's just call it TechCo, has been trading in a range between $50 support and $55 resistance for several weeks. You notice the price is fluctuating between these levels, but it has yet to be able to break out of this range. The stock price begins to rise and breaks the resistance level at $55. And it's on heavy volume. You've been waiting and waiting patiently for this technical resistance level of $55 to be broken, and it finally has. At this point, you decide to make a breakout trade. You buy the stock at $55.06, believing that the breakout through resistance, combined with the heavy volume, will result in a continued upward momentum. After the breakout, the stock continues to rise, eventually hitting $60. At this point, you decide to sell and lock in your profit. This results in a gain of nearly $4 per share. This is a simple example of a breakout trade, and actual trading scenarios may be a little more complex. For instance, you'll need to consider transaction costs, your overall portfolio strategy, and how much of your portfolio you're willing to risk on a single trade. Breakouts do not always continue in the expected direction and can sometimes be false breakouts. So it's essential to manage risk carefully and consider using stop-loss orders to limit potential losses. A news catalyst can be a catalyst that catches our attention, and a technical analysis catalyst, like the breakout trade above, can grab our attention as a stock to trade. Price can be a catalyst as well. Stocks gapping up or down 3% in the pre-market with volume also get our attention. This means it is 3% higher or lower than its previous closing price. If a stock reacts like this in the pre-market, it most likely has a catalyst behind it. Often, a stock with a news catalyst will gap up or down 3% with volume, but sometimes stocks gap without catalysts. Price alone can be a catalyst for day traders. For a stock to land on our watch list, it also needs volume when gapping up or down 3%. The volume required is at least 10% of its average daily volume. Corresponding volume with gap confirms that there is a catalyst behind the name for this trading session. If a stock is gapping up or down and it is not complemented with volume, then we'll pass on the idea. Stocks in play often offer us the best opportunity as day traders. You can find them daily in every different kind of market, offering opportunities each day. After we find a stock with a catalyst, news and or technical, we grade it. We grade the catalyst on a scale of 1 through 10. The stock must have a catalyst of 8 or better to be considered in play. We determine whether the catalyst is worthy of us trading the stock. We want to save our capital for the best day trading opportunities. Here's a cheat sheet to help you decide whether we trade the stock. So if the catalyst is a 10, we're definitely trading the stock and most likely with increased size. 9, we're trading the stock. 8, we're trading the stock, but we'll want to confirm with the price action. 7, we need a terrific setup and price confirmation to trade the stock. 6, pass. 5, hard pass. 4, no thanks. 3, not interested. 2, move on, buddy. 1, never. You should get in the habit of scoring each catalyst. So you identified a stock in play. You identified a catalyst that should make the stock catch the attention of big money traders and thus be in play. Are you done? Do you just start trading the stock? No. We need more information. We've identified a stock we will probably trade when the market opens, but we need to check a few more things. Below is an example of information we check next to determine whether we will trade the stock. This illustration below is from an S&B trader outlining a recent trade, sharing the information he checked before deciding to trade a stock. We call this info intraday fundamentals. Intraday fundamentals is the information we need to research next. We check this information as well before deciding to trade a stock. So let's discuss what information we need to check with so you can make the best decision in choosing a stock. When picking the right stock to trade, we want to ensure it has the right characteristics. As mentioned, we check a stock's intraday fundamentals to do so. Not only do we want a catalyst for the stock, but it also needs other characteristics. Without these other characteristics, the stock may not be right for us to profit as day traders. One of those characteristics is good liquidity. Liquidity is the ease which we can enter and exit a stock. Liquidity allows you the ability to get the amount of stock you want at the price you want for the stock. For example, when you go to buy a stock at $30, you want to actually be able to buy the stock at or very near $30. You don't want to end up buying the stock at $30.50. This is too far away from where you wanted to buy the stock. When you go to sell the stock at $30, you want to be able to sell it at or very near $30. You don't want to sell the stock at $29. This is far from where you wanted to sell the stock. Let's say you want to buy 1,000 shares of XYZ at $30. With good liquidity, you buy 1,000 shares of the stock at $30.01. You set a stop at $29.49 and you wish to sell the stock at $33 and can do so as the stock has good liquidity. So basically you got the stock 1 penny above where you wanted it and exactly the price you wanted to sell it. 1 penny of 1,000 shares costs you $10. So the stock costs you $10 more than you optimally wanted to pay. This is an example of a stock offering excellent liquidity. Now let's compare this to a trade that offers poor liquidity. You seek to enter and get filled at $30.26 for 1,000 shares. You set your stop loss at $29.49. The trade doesn't work and you seek to exit near $29.49, but exit at $29.14 for 1,000 shares. This trade costs you $260 more than you wanted to enter and $350 more than you wanted to exit. Yikes, it's not good. You lost on the trade, but you lost much more than you expected. This is an example of a stock with poor liquidity. This is too expensive for us to trade. This will not allow us to make money consistently. It's fine to be wrong and lose on trades, but we can't lose way more than we intended. We cannot control our risk if we cannot get in and out near where we want. And there is more to good liquidity than just entry and exit price. Further, when you go to buy 1,000 shares at 30, you actually want to get 1,000 shares. You don't want to end up with 10. A stock with good liquidity allows you to get the number of shares you want as well. We need to introduce a vital trading principle to you that illustrates why the liquidity of a stock is essential. Good day trading requires the ability to make excellent risk-reward trades. A good risk-reward trade allows you to risk $100 to make $500. You have to be able to control your risk to make good day trades. If you think you're risking $100, you cannot lose $500 in the trade. When a stock has good liquidity, you can control your risk. You can exit losing what you intended to lose on a failed trade. What good is it to trade a stock with a catalyst if you cannot get the size and price you want? Without good liquidity, a stock is not worth trading. Another important characteristic of a stock related to liquidity is the right amount of volume. If a stock has too little volume, then we pass on the stock. If the stock does not trade more than 1 million shares on the day, we won't trade it. Usually checking a stock's average volume gives a quick guide on whether it will have enough volume. An independent trader can easily find a stock's average volume by checking for it on a public website such as Yahoo Finance. Why would we pass on a stock because it trades too little volume? Because if the volume is too low, it's too dangerous for us to trade. It potentially places us in a position where we cannot control our risk. We may lose way more in the stock than we want. When the volume is too low in a stock, it lacks liquidity. When volume is too low, it may be too hard for us to exit when we're wrong. Thus, we may lose more than we wished on a losing trade. Perhaps we were fine losing $100 if our trade failed, but we couldn't afford to lose $1,000 in the same trade. There's other information we must gather before we trade a stock to ascertain whether the liquidity in the stock is likely to be good. We will check where the stock is trading for its 52-week range. If the stock is broken above its 52-week range, it may move more violently to the upside and offer us worse liquidity. If a stock is in the middle of the range, it's more likely to make more measured moves and offer us better liquidity. We check the shares available to trade, shares float, to gauge the stock's liquidity as well. If the stock has many shares available to trade, then the stock is more likely to offer us good liquidity. If there are very few shares available to trade, sometimes called a low float, then we're more careful in trading the stock as we expect less liquidity. We check the short interest in the stock to determine if the stock's liquidity. If the short interest is above 30%, we carefully trade the stock as we expect less liquidity. If the short interest is less than 5%, then we expect good liquidity. Again, we could easily check this by visiting Yahoo Finance or FinViz. We check the ATR, the average true range of a stock, to determine its liquidity. The ATR measures how much the stock moves on an average during a trading session. If a stock has a very high ATR, then we are carefully trading the stock as we expect less liquidity. If the ATR is low, then we expect good liquidity. The point in checking the intraday fundamentals of a stock, this specific information about a stock, is to check whether it will offer good liquidity. Remember, we need good liquidity to make solid trades. A good trade idea without good liquidity is not a good trading idea at all. We need a good catalyst and a stock with good liquidity to find trading opportunity. You must find a stock that will move. A stock that will move away from price. A stock that will move away from the price you entered a position. If a stock doesn't move, then we cannot make real money as traders. One often used measure for how much a stock will move is ATR, the average true range. ATR is a technical analysis indicator that measures the volatility of a stock. For our purposes, this is how much the stock will move on average during a trading session. We stick with stocks that have an ATR of at least $1. That means it will move an average of $1 during the trading session. And then we look for stocks with a catalyst likely to cause the stock to move at least 2 ATRs during a trading session. So we want a stock that will move at least 2 points intraday. If a stock meets this criteria, then the range we are seeking for us to trade it. So you find a stock with a catalyst, check. You check the intraday fundamentals, and it meets the criteria to trade, check. You enter the trade. But you wonder, How do I know I have chosen a stock in play? Is there anything else I can check to make sure? Yeah, there is. A quick note on how to confirm that you're in a stock in play. You can see if you have chosen wisely for the stock you are trading. For now, you can check if big money traders view the catalyst you spotted as significant. How you can check to see if the stock is worth trading. The best and easiest way to confirm that the stock is in play is by looking at relative volume. RVol measures the increased volume that a stock is doing on a given day. We look for stocks that have an RVol greater than 3. This means that the stock is doing more than 3 times the average volume on this given day at the given time on the average day. Increased volume means that most market participants are more interested in this stock on this day. This allows stocks to move more during this trading session, which gives us more opportunities to profit and a better risk reward on our trades, if we know what we're doing. When day trading, finding the best stocks to trade is essential. Now you have a blueprint to choose the best stocks to trade. What tools do day traders use to find stocks in play? Day traders use news services, filters, or scanners, market research, and technical indicators to identify the top day trading stocks to trade. Let us provide you with some help in obtaining these services to help you with your stock selection. The top news services day traders use are Trade the News, Briefing.com, the Bloomberg Terminal, Benzinga Pro, Yahoo Finance, CNBC, MarketWatch, FinViz, and Reuters. We primarily use Trade the News on the trading desk to prepare for the open. Many traders have access to a Bloomberg terminal for news. Traders also use technology to alert them to the best stocks to trade. The SMB scanner helps traders spot the stocks in play by populating them before or during the trading session. This is a terrific tool to help traders find the best trading stocks. Traders also build custom filters to alert them to the best stocks to trade. What are trading alerts? A trading alert is as it sounds. It alerts you when a stock hits a certain price that you have set. You need the functionality to set alerts on your trading platform as a day trader. Most online trading platforms will offer the ability for you to set alerts. For advanced day trading, you may want to set custom parameters for when you want to be alerted to a stock. For example, perhaps you want to see all stocks that hit an intraday high after 11 a.m. that also have an RVol greater than 3. You can set an alert for this. Many trading platforms have this built into their platforms. However, some advanced day traders seek a more sophisticated alerting solution, whether custom filters can be built. Solutions for this may include Trade Ideas, TradeStation, and Bloomberg. Traders also use research from analysts to help them find the best stocks to trade. A favorite market report our traders use daily is Vital Knowledge, which provides comprehensive insights into market trends. Traders utilize specialized tools like gap scanners, news services, and market reports to identify top trading stocks systematically. Gap scanners like the SMB scanner highlight stocks with significant price gaps, providing potential opportunities. News services such as Trade the News offer real-time updates for swift reactions to market-moving events. Market reports like Vital Knowledge provide comprehensive insights into market trends and earnings. Combining these tools help traders make informed decisions and find stocks with high day trading potential. Day traders also use technical indicators to help them spot the best stocks to trade. Examples of the top technical indicators are moving averages, the Relative Strength Index or RSI, Moving Average Convergence, Divergence, MACD, Bollinger Bands, Stochastic Oscillator, Fibonacci retracements, volume, and of course ATR. Monitoring news and market developments is vital for stock selection as they impact prices. Staying informed allows traders to anticipate volatility, identify opportunities, and capitalize on price fluctuations in day trading. Now you have the blueprint to find stocks in play. Mastering this essential skill enhances day trading success. Stay informed, stay strategic, and happy trading.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.